Well, hello, everybody. Welcome back to another trading battle. Thank you for being with me here on today's major news event. We just had the Fed, of course, the Jerome Powell press conference, making their decision to hold interest rates steady, but marking notes about both the jobs market and the state of inflation. Gold is sending off to new all-time highs. The stock market's sitting just around all-time highs. You have crazy stuff happening in the Japanese yen. Crypto's just lackluster going on right now, and so much more. But today, what we're going to be doing, if this is your first time ever being at a trading battle, welcome. Make sure to subscribe, hit the thumbs up button, all that good stuff here on YouTube. But during the trading battle, what we do is we have two different guests who go head to head, and they trade the markets live here, especially with everything just came out with the Fed meeting. Markets are moving. We want to jump right into the action. Essentially, how this works is two traders are given head-to-head the opportunity to place trades in front of a live audience. And what we're going to be doing here is the winner is whoever has the best P&L by the end of this week. So they're going to be placing lots of trades here. We're going to get right into all of the action. So what we'll do here first is we need to go ahead and introduce our guests. Before that, I just want to also mention that if you stick around throughout the stream, we are going to be giving away I'm not even kidding, 5 different free challenges for today's live stream sponsor, DNA Funded. So if you stick around, there is a possibility that you get some really great freebies for a really great prop firm. So without further ado, let's go ahead and roll the first clip here to help introduce our guests of the day. All right, so we are here with FX Big Dog, Gary, and of course, Chris Guzman. It's good to have both of you guys here on the stream here with me. Chris, is this your first trading battle?
No, far from it.
Not first. Okay, so you've done a couple of rounds. So, you know, we've got veteran pros in the room here, which is great. This is awesome. So Gary, of course, has done battles before. Chris, you've done as well. So we are going to be trading a lot of different things here today. I'm excited to be here with both of you guys. I'm just going to real quick give each of you your flowers in terms of a little bit of an overview about our two traders here who are going to be going head to head. First up, we'll talk about FX Big Dog. That's, of course, Gary. Gary is a seasoned investment and trading expert with over 30 years of market experience, and he has explored just about every trading style you can imagine, from Fibonacci to candlesticks. Over the years, Gary has built a reputation for turning complex technical analysis into something traders can actually use. He has created over 1,000 strategies, and he is obsessed with using technology and smart systems to help traders perform consistently, even when they cannot watch the charts all day. Gary, welcome back to the arena, and good to have you here.
Thank you, Nick. Nice to see you again, my friend. It's been a crazy ride over the last year, but it is good to be back and a lot to look forward to.
It certainly has. It's going to be a lot of fun. You've got, if you see in the background, you can see he's got the gloves from the trading battle too. So he's a true veteran here, which can be great. Let's also talk about Chris. Of course, Chris is the founder and CEO of Kickstart Trading, a trader development and funding firm built on structure, discipline, and long-term consistency. Originally from New York and now based in the UK, Chris has spent over a decade trading and teaching full-time, and he specializes in gold with clean price action execution. By the way, there is no shortage of demand for education on gold right now. My goodness, that thing is going crazy. He's a creator of 555 Method, a rules-based system built around tight risk parameters, asymmetric reward, love that, and high probability structure. Chris, welcome back, and good to have you here.
Thanks so much, Nick. Good to meet you, and good to see you, Gary.
Yeah, you too, Chris.
Should be a lot of fun. So again, a lot of listeners, of course, this may be your first time to a trading battle. So just a quick overview. We are going to be going through 5 different challenges here today. We're going to be giving away some funded accounts. So stay locked in, stay paying attention. And I think we should just jump right in. We got 5 challenges to get through. So let's do this. You guys are veterans. I've done this at least once or twice before. And so I think we're gonna have some fun. Okay, so the first challenge of the day is we are going to be taking a look at the S&P 500, NASDAQ, gold, silver. Here's a little bit of a preview video to preface this first challenge. Okay, so without further ado, let's jump into it. Is this Chris's charts or Gary? This is Gary's charts, right?
This will be mine. Yep.
Okay, Gary. So Gary's got his charts up on the screen. So I guess Gary, we'll let you go first here. S&P 500, Nasdaq, gold, silver, whatever you want to trade. Take your pick for the first trade today.
All right. Well, to be honest with you, everything that's going on at the moment right now with regards to the Feds, the decision that they've made to keep the rates unchanged, inflation, where it's at, it's actually stabilized a little bit. But everything that's going on right now, I have to go back to the technicals, because anything we think the market's going to do, the market may not be on the same path. And so looking at the charts, and I think you said it earlier on, there's no thinking, there's no sort of readjustment to your thought process when it comes to trading gold. I stood with a client last night, and I said to the client, you're absolutely crazy if you're going to be selling gold right now. So so gold currently right now for me would be an absolute buy until we see a confirmed reversal. A lot of times we see insufficiency, we get a lot of gaps in the market as the market goes up. And I think the only thing that you should be doing is buying at that rebalancing of insufficiency and buying the market long. So I would say I'm going to be long on gold. Now, how long is the challenge for, Nick? Is it 2 days or 3 days?
End of the week. So you got till Friday.
End of the week. So I'm just moving my camera. End of the week. So we're going until Friday. Man, I'm gonna go ahead and look at this right here. And I just can't sell it. I am looking for a reversal. It's not there. I just have to buy it. If it's going to be a 3-day hold, so be it. But I'm going to have to just buy in gold.
Okay, straightforward. Gold's just been a monster to the upside here recently, and it certainly has been a tricky one to try to sell. So with that said, we'll give you the chance to punch in your order there and set that up. And meanwhile, we'll go over to Chris. Chris, obviously, same prompt to you. S&P 500, Nasdaq, gold, silver. You've got in your bio that you're a big gold guy. Is it going to be gold for you as well, or are you going to trade something different?
It is going to be gold, and actually, I think it's going to be a rather interesting discussion today, because I'm very much with Gary on that one in terms of reverting back to the technicals. I think, given everything that we've got going on geopolitically, given the government shutdown in the previous quarter and the fact that we're still trying to play catch up and reconcile all the misconstrued data that occurred as a result. I think a couple of things. I think, first of all, I think today's decision is already priced in. And so, we're not really seeing too much of a reaction just yet. And obviously, Powell is still speaking right now as we're live. But, we're not seeing that much of a reaction in the market just yet. Gold is obviously, it goes without saying, just a ridiculous proposition at this point. It's never mind going for the moon. It's now sort of, trying to leave the galaxy,
Yeah, seriously.
There's just no, and I agree, Gary, there's no confirmation of a turnaround anywhere in sight here. And these days, all-time highs don't seem to really mean anything to gold traders. So for that reason, I'm kind of long as well, but it does concern me, how overextended we are. And I don't see it going on forever, even though it's been doing that. I don't see it going on forever. And at some point, we do ultimately have to see a pullback as liquidity mitigation comes into play. So for me, I want to go long too, but not yet. I want to see this pull back some, collect some bull side liquidity, and then I'll get interested in going long. Where we are currently, can you see my screen?
Yep, we've got it.
Okay, so where we are currently, you can see, obviously all-time high. We've actually just taken out the all-time high, which was just established earlier today. So, we now have a new all-time high yet again in the same day. Prior to that, the market was squeezing a little bit over here. It looked for a moment there like there was a possibility that it was going to come back. But obviously, we've come up and created this new higher high. Now, the problem I have, again, is that I think we're just super overextended here. Who saw gold being at $5,300 an ounce. I mean, it's absurd. It's obscene, really. So, you know, the premium pricing factored in, I would be interested in taking a buy, but I wouldn't be interested in doing so until we get down around here. And I'll just kind of circle the range over here. So I'm really looking at around 51.57, 51.60, you know, somewhere in that region to get interested in the long-term long here. I struggle to take a long right where we are, just because I think that that's just pure speculation at that point. You know what I mean? That it would continue from this point. But again, I agree with Gary that there's no confirmation of a pullback. So I'm a little torn. To be honest, though, I am leaning in the short term. I can't stress that enough. In the short term, I'm leaning more on, you know, towards shorting this, just again simply to try to catch that pullback. And then once we get down into that range around 51.60 to 52, that's when I'll get interested in buying again.
Sure. Okay. Well, sounds good. So are you going to go ahead and place the short position, or are you going to just hold off and wait for a dip?
I was trying to hedge my answer. I don't know if you caught that.
It was a smart move. I guess what you could do, Chris, is you could put a pending buy limit order if you were only set on buying if it were to retrace. You could whatever you'd like to do. It's of course up to your choice there.
Yeah, absolutely. And actually, that's what I do frequently. I frequently operate with pending orders. I find it's a much more peaceful way to trade, to be honest.
Sure.
Yeah, I mean, I'll probably do a combination of both. I'll probably look for an opportunity on the smaller time frame here to take a short now, and I'll go ahead and place a pending long in my zone where, you know, at my target prices.
Sounds good. Okay, well, in that case, we'll give you the chance to look at it, make your decision if you want to place the short, if you want to update us as we go along. Got some time here to continue on with more challenges and stuff to set up. So gold, of course, just a monster mover here, just unbelievable upside move that we have seen here, you know, and just one for the ages in terms of so far. I think we're up like 30% or something crazy in like the last, you know, few weeks. It's just unbelievable. Anyways, we'll see if it can continue. So Gary's betting on the continuation. Chris is balancing a potential short-term sell position with longer-term pullback buys. We'll see, as we only do have until the end of this week on the battle. We'll see how that all plays out. We're going to keep it moving here. We got another challenge. Our next challenge is going to be on EU, UJ, AU, and dollar Swiss. But before we do that, let's do our first giveaway. So what you can see here on the screen right now is you've got a QR code. So how this will work, if you've never been a Trading Battle participant before, we give away DNA funded coupons. Now, these are first come, first serve. I want to make sure I clarify this, because every time someone gets upset, they say, hey, I didn't get the free giveaway. One person gets it. The first one has just been dropped in the chat. It is first come, first serve. The first person to enter in that code, as you can see on the screen there, first person to enter that code will get the free 5K challenge account from DNA Funded. So again, thank you to DNA Funded for sponsoring the Trading Battle here today. And that is, like I said, first come, first serve. So let's go ahead and do challenge number 2 here. We'll go ahead and play the little teaser, and then we'll jump right into it. So just like gold's been interesting, so too has the dollar. Dollar's been dropping really hard in the last few days, few weeks, but rebounding sharply today. So the question is, do you buy the rebound hype here, a dollar up 0.7% on the index level, or do you fade the rally? And of course, last time we started with Gary, so maybe we can start with Chris on this one. Your options, you can trade EU, UJ, AU, pretty much any of the major currencies, whatever you see fit. And I'd love to hear your thoughts on this dollar move. Is there more of a rebound coming, or is this just a pullback before we see further selling pressure in the dollar?
So I think there is a bit more of a rebound coming. And again, I'm speaking just purely from a technical perspective. You know, technically speaking, dollar has actually been range bound. So, you know, while we have been seeing a quite extensive sell-off that coincides with the gold rally. To be honest, it's not at all surprising that we've seen that, because all we've really done is pushed back into support. And if you can see my screen, I've kind of got that outline for you here. You can see that since really May of last year, the dollar has been stuck inside of this range. Now we have created this new low just outside of support, just recently. And I've kind of outlined there what I think we're going to see happen from a technical perspective. Again, given that, we're so low down on the dollar, I don't think that this initial rate decision is having much of an impact on the market at all. I think, again, the market's kind of getting immune to these sorts of things and is more interested in the bigger picture stuff, the geopolitical stuff, the fact that, there's potentially a government shutdown coming up yet again on Friday. So, all of those things. I think dollar should come up a bit further. And as a result, I'm looking at euro US dollar, and I'm looking for a short-term sell. Now, I'm only really looking to sell it down to around about the 118.40 region, and that just puts me cleanly inside of this demand zone right here, without challenging these lows too much. There's also a gap right over here that I think needs filling. So I'm short on euro USD, and I'm going to go ahead and short it and take it down to around about 118.40 is my target price.
Okay, I like it. So looking for a little bit more weakness on the US dollar. Euro dollar had a big pop yesterday. I'm wondering, for the audience members, while we're at it, what do you guys think about the dollar? So we're weighing in. We got Chris and Gary going at it on the US dollar. Comment in the chat here. What do you think about the US dollar? US dollar's been all the rave here recently for the Forex guys and girls. So we'll see what happens next. Gary, you're up. What do you think about the US dollar? I'm curious your thoughts on this. Is this something that you're looking for longer term rebounds? I've always enjoyed, Gary, you and I, we've streamed together for years at this point, back and forth. I'm always curious to see what your charts look like. I know you have kind of a top down, higher time frame perspective. So I'm definitely interested to see what you have here.
Yeah, absolutely. So Nick, so let me just give the audience a little sort of perspective of, when we get down to the lower time frames, what is it we're looking for? So the most important thing is we have to first understand what is price doing and what is the smart money doing, right? Because we know that smart money likes to take out retail traders' stop losses. So we have to define, then there's 4 reasons why the market moves. 1, rebalance insufficiency. 2, rebalance equilibrium. 3, hunt for liquidity. And 4, create liquidity. So those are the 4 reasons. Now that we understand what the 4 reasons are, we also understand there's patterns in the market. One very familiar pattern that many, many traders should know of is, of course, the AMD: accumulation, manipulation, and distribution. And this helps us to be able to define whether we're on the buy side of the market or the sell side of the market based on the breakout of the accumulation. So as an example here, here's the dollar index. We had accumulation, price accumulated. We broke out to the south side. We call that the manipulation move, which means we're on the buy side of the curve. And then we now move into the sell side of the curve, which means we're now in distribution. A distribution target is normally the starting point of that accumulation. So we've got structure. Once we've got structure, then all we have to do is look for price to move to the south side of a trend line or south side of whatever indicators you're using. But to understand more what the market's trying to do is understanding where the turning point is. And so once the market has turned from manipulation to distribution, now our mindset should just be sell, sell, sell. Now that we're looking at selling, we also have to understand that there's what we call inducement in the market. This is where smart money is pushing price to a certain level to induce buyers to come in. And then when they come in, which is mostly retail traders, then smart money pushes the price back down again. So it's almost like a false breakout. And so we had now on the dollar index a very similar pattern here, where we had the wave structure forming, wave 1, 2, 3. Price went up, came down, we had a liquidity sweep, and then price went back up again. And this is where it induced traders to believe that the dollar index is starting to go bullish. Now, the same sort of pattern is what's happening with the US dollar CAD. Now, I know we're not looking at US dollar CAD, but I just want to use this as an example. Same thing. Here we had accumulation, price manipulated, took out buy-side liquidity, which is normally the case. And then we started seeing a distribution move in a wave structure. Wave 1, 2, 3, price comes back up to retest wave 4, which is resistance becomes support, or support becomes resistance. And now we're on a downward move. The same thing applies here. And then if we go to the euro, which I like that, which are the other pairs that we can look at? Because I know he's looking at the euro. So let's see here. Aussie. Yeah, I actually do still like the euro US dollar. And I agree with Chris, because if I go to euro US dollar right here and I pull up this chart, this is what's happened here. Here we had accumulation. Price manipulated here. We came to a right here on the right-hand side, there was a huge fair value gap sitting over here. Price came back, tapped into that, and then turned around. So we had accumulation, manipulation to a fair value gap. Price then started moving into a five-way structure. Wave 1, 2, 3, 4, and 5. Now that we've got to the fifth wave completion here, this is where the reversal pattern is. We're now seeing the market, especially at that psychological level, 1.2, price is now rejecting that level. And so what we do is we go down to the lower time frame and we look at the lower time frame. So what's important for me is I want to see the market displace below this inverted fair value gap. This is my sort of like first turning point. We haven't had it yet. And so that is one of the things that I'm like on the sideline about, and saying, hey, listen here, I'm not quite ready to sell the euro, but I'm not quite ready to buy it either. So it's a really tough situation, because this is called what we most refer as a no trade zone, which means that we don't have conviction to get into the sell yet, and we're in an upward trend, so we're favoring more the upside momentum right now. So I'm going to say that, just
Gary, I'll just sorry to cut you off. If you want to trade dollar CAD, go for it. I think the major currencies opens up to whatever you want. So if any major USD, I think is fair for this one.
Okay, sweet. Well, then in that case, then that changes the dynamics a little bit here, because what I'm looking for is an inducement level push. So I am looking for dollar to push up a little higher. So what I will do is I'll put in a sell order right at the fair value gap on the 4-hour, because it is only 3-day trading. I'll put a trade in over here. I'll sell here at the inducement level. Oh, hang on, I got to switch the symbols. My bad. So I'll sell at the inducement level, which is up over here. And so I'm going to put a sell limit there at that point. My stop losses would be above that fair value gaps and over here. So I'm going to keep the stops tight. And then what I'm going to do is I'm going to go to the larger time frame, and I'm going to look at the weekly here. Here is our support here. Now, we're probably not going to get here at this distribution target by the end of the week, but I'm going to set it for that area, because I'm going to give it as much sort of run as possible towards this area right here. So I'm going to set the target here. Actually, I can go ahead and just use the target here and just drag it there. So I'm going to chase after the distribution target. And what this does for me is it gives me a 1 to 10. This is a 10x risk reward ratio. So 1 to 10 risk reward. I'm probably not going to hit that in this next 3 days, but it's going to give me at least sort of an opportunity to make as much as I can.
Sounds good. Okay, so breakdown on dollar CAD. I like it. But thanks for doing that, Gary. Sure. I think it's time for our next giveaway here for the audience. If you guys are enjoying the giveaways, by the way, smash that like button. Help us out on YouTube. We'll do more of these streams as long as people are enjoying them over on the Trading Battle. I'm happy to be here. I'm sure you guys are as well. But help us out by hitting the thumbs up button, subscribe, and let's do another giveaway. Thanks to DNA Funded, we are giving away now a 10K giveaway account. This is a challenge account, 10K giveaway, completely free. The only caveat, the only warning, it's first come, first serve. One person gets this. Here it is. The voucher drop for a 10K one-phase challenge is now on the screen and in the live stream chat. It is first come, first serve. Scan the QR code to explore DNA Funded. And again, big shout out and thank you to them for supporting the show. By the way, stick around. More giveaways are coming and more trading is coming down the pipeline. And yes, they do get bigger and better as the stream goes on. It's a little bit of a reward to the audience for sticking around through it. So without further ado, it's time for challenge number 3. Let's talk some crypto. Check this out. Okay, so cryptocurrency, what used to be a more exciting topic seems to be a little bit boring these days. People in the crypto crowd are, losing faith or something. I don't know what's going on over there. But with crypto, we started with Chris on the last one, so we'll go ahead and start with Gary. I know you're punching in order, so I don't want to rush you here. But crypto, our next one here, of course, the rules for this one: you can trade Bitcoin or you can trade Ethereum, long or short. Remember, the duration of this battle goes until the end of Friday. So kind of shorter term on this. Crypto has been, just give us your thoughts overall, Gary, on crypto. And it's been a tough period for crypto the last few months. And I think I've seen a lot of posts, people frustrated with it, especially given that stocks are at all-time highs, gold and silver are running, and crypto is just chilling out down at 89,000.
Yeah, no, it absolutely is. But I just want to give a quick update. I just gone ahead and taken partial profit on my gold trade, took out 10 grand, and I'm letting the rest run until my target there and so plus. So just getting, and the reason why I took out some partial, because if I'm going to look for a corrective move, I might want to jump back in on that with another entry. Okay. All right, just to update on that gold trade. So the crypto market, you're right, absolutely. I'm very heavily invested in the crypto market, specifically the Ethereum. And when Ethereum dropped back down to like 1,500, I really got in big on Ethereum at 1,500. And then we got to almost 5,000, and I was like, man, should I take some profit? And I let it ride. So I'm feeling the heat right now as this market's pulled back down. But what I also know is, in order for price to break very strong levels, it needs to grab liquidity. And so if it doesn't have liquidity, it doesn't have enough fuel to push to those levels. And so when I look at ETH right now, and I go to the larger time frame, I look at it right here, and I see this is something that had to happen. It had to happen. Price had to come back. And so what I'm very interested in is this weekly fair value gap here, and it's priced just above 3,500. And so this retracement that we've seen right now is just another area to refuel. And you look over here, if you understand Elliott wave structure, then you'll understand this. This is, and let's see if I can pull up the waves here. Yeah, is wave 1, wave 2, and then we have a really extended wave 3, which is always happening. When the market's completed wave 3, price always, or not always, probably 80% of the time, will come back to retest wave 1 breakout. And so this is the breakout point right here. And this is what happened. Price came back here, giving us the fourth wave move. The next move is back up here at the highs. And so right now, I would say it is absolutely the best time to invest in crypto is right now. I don't believe it's going to go lower, but if you want to be conservative, I would say that, and of course it's not advice, this is just what I personally would be doing, is buying above a close, above the weekly fair value gap, which means around 3,500. By the end of the week, if we close out Friday by 3,500, I'm long that Saturday, Sunday, going long on Ethereum. And what will also be exciting is if we have this weekly close above here and give us a railway track. Railway tracks, I do it in my futures classes. Railway tracks are super good to jump in, and they're really profitable. So I would be looking at either a railway track or even just price trading above 3,500. So for me, if I was going to bet on a crypto market right now, it would be buying in with Ethereum right now.
Okay. All right. Thanks for the breakdown. And yeah, really, if we get that kind of move, I know about 10 million crypto traders who would absolutely love to see that kind of move in Ethereum. A nice push back towards those all-time highs for Ethereum would be much welcomed for a lot of crypto traders and investors. And yes, as you mentioned, not financial advice here. This is for educational and insights purposes only. So please be careful out there with cryptos. They are very volatile, and where there's a lot of heat, it can go really well or really poorly. So please be careful.
But I'm really saying, if you buy a lot of crypto right now, that will really help my situation. I'm just saying it, okay?
Yeah, you're like, come on, go ahead and pump it up for me, guys. Yeah, no, I totally get it. Love it. Okay, so we're trading Ethereum here, and Chris, what about you? So we've talked a little bit here so far about the dollar. We talked about gold, talked about the euro, crypto. I guess we haven't spent a lot of time discussing together. So are you a crypto guy? Are you a pro crypto, bearish crypto? What are your thoughts on it?
Yeah, so I'm not the biggest crypto guy ever, but I do dabble.
Okay.
At the end of the day, my view is a chart is a chart. So, my technical analysis just applies to anything across the board. And in the case of Bitcoin, so Gary took Ethereum, so I'll go ahead and take the other one. And in the case of Bitcoin, as you can see, once again, we have consolidation. This is our upward channel over here. We obviously did have a big sell-off on Bitcoin, as you see, but as this thing moves inside of this channel, I see it coming back up at least toward resistance over here, and collecting this bearish liquidity in these supply zones over here and then over here. So I'm long on this temporarily. Once again, in the short term, I'm long.
Okay, I like it. So longer term, do you hold any sort of cryptos just passively, or are you mostly just trading it?
I'm just trading it. Yeah, I don't hold any passively.
Sounds good. I'm in the same camp. It's not that I have anything against crypto, but I love it as a trading vehicle, long or short, for capturing risk on, risk off type moves in the markets. But yeah, I'm the same way. Hodler, I personally, just personal preference, I like stocks, because if I'm looking at something that yields cash flow, I feel that I can understand that a little bit more. However, hey, crypto has been a phenomenal buy and hold type of asset over the longer term here. We'll see if it continues in the future. Yeah, really interesting times, especially with this whole, is the dollar on the way out kind of thing. Gold, by the way, guys, is up 3.4% today after everything that it's already been doing. Just an updated price here. You're talking about gold at $53.60 an ounce. Unbelievable. Really just an insane time for precious metals. That's why, I was asking that question when we started out with crypto. It's like really interesting that cryptos, you would think a little bit of this de-dollarization theme would factor into crypto, but who knows? Maybe it's a delayed move before we see crypto start to join the party. So anyways, with that said, we've got some giveaways to get to. This is our third giveaway of the event. And I told you, I promised it would get sweeter here. The deals are getting better for the free giveaways that we are doing for today's live stream sponsor, DNA Funded. Currently, 25K is up for grabs, not $25,000, but a 25K one phase free challenge from DNA Funded is going to be given away here in the live stream chat. We'll drop that here for the first come, first serve person. You guys know the rules. The first person to enter this in at that checkout will get the 25K one phase challenge completely for free. That is first come, first serve. If you try and punch it in and it says invalid, that is because someone already grabbed it. So you got to be quick, got to get fast with it. And don't worry, we have 2 more to give away in the rest of this stream. So don't go anywhere. And now we'll switch over to, in my personal opinion, possibly the most interesting prompt, and I am especially interested to see what Gary says, because we've had a lot of conversations about this asset in the past. Coming up next, challenge number 4. Check this out. It is the Japanese yen. I have a friend that I was just doing a live stream with before this, Chris Pulver. Many of you all probably know Chris Pulver. He calls the Japanese yen the Widowmaker because this thing is a absolute monster. It has so much volatility, at least the Widowmaker in the currency world. That's using his quote. Chris, you're up first on this one. What do you think about the Japanese yen? Do you have, I don't know how much macro or fundamentals you incorporate, but I'm a big macro guy, and listening to all this stuff going on with the Japanese bond yields and the yen just completely plummeting here recently. Is this the sort of chart, if you're more on the technical side, which it seems like, if you're more on the technical side, is this something you're looking to join in on the yen selling trend, or would you fade the sentiment there? What do you think?
Yeah, so first of all, I love what Chris Pulver said. That's hilarious.
Perfectly fitting.
Yeah. No, for me, I mean, you kind of clocked it already. I'm a big technicals guy. I don't spend a lot of time on the macros, on the fundamentals. I'm all about the technicals. And for me, Aussie yen, I like Aussie yen because it follows a pretty clean, as far as the yen pairs go, a pretty clean pattern here. I'm long once again. I'm, But once again, I'm anticipating that in the short term, we should get a bit of a pullback. There's some bullish liquidity over here that the market likely is going to collect before continuing long. So for me, I mean, if I'm going to go ahead and buy right here, then at a minimum, my stops need to be below this cluster of lows over here. But really, the way I would actually play this is I wouldn't go long here. I would once again put a pending order for an entry limit down here, again with a stop below that cluster of lows, and then looking to target, first that high, and then we've got some Fibonacci extension targets as well. In this case, my extension target is 117.57 long term. So I'm actually bullish on Aussie and all the way to 117.57. But again, in the short term, I can't deny the risk that it pulls back first to grab bullish liquidity before continuing long.
Sounds good. Yeah, no, it's a clean chart. The yen weakness has been very much causing some very powerful trends, and I think that's where the quote unquote the widowmaker phrase from Chris Pulver comes from, is this concept that a lot of currency traders love that back and forth type of movement that you can get in currencies, but the yen sometimes breaks that rule and is just unbelievably one directional, at times, not always, of course. But same question to you, Gary. I will withhold from ranting for 30 minutes about why the Japanese yen is doing what it's doing from a macro perspective, because I'm a big macro nerd. But I am curious from you technical traders. Well, you guys know some macro as well, but you act on the technicals. I'm curious, Gary, what your thought here is on the yen pairs. Are you more someone who's looking to fade the yen rally, or I should say buy the yen, be more bullish yen and fade things like AJ and EJ and GJ? You looking more to fade that, or are you looking more to join the overall trend?
Yeah, so and I see a lot of people talking about ICT models and so on in trading that, and so Chris has actually been very polite. The name he's given the yen. I normally call the yen the currency from hell, and that's because the pound JPY in 2008, I had a short position, and it murdered me because it just didn't want to stop. And that's the thing with the yen pairs. Because there's so much manipulation. I mean, even Trump's getting on the bandwagon here when it comes to verbal manipulation, or even sort of like rumors of in manipulation. And you've had a lot of chatter of that going around the last week about the yen. We haven't seen a lot of movement, though. I expected more out of the US dollar yen, to be honest. But yes, there's been a lot of rumors about that. But then it comes back down to when things are, it's like when things are really chaotic, then you really have to be short term, which means you got to be in and out, get in and out. Don't be living on the long term of that. Unless you have a clean, straight breakout in a direction, then sure, jump on that. But if you don't, you're going to get whipsawed and you're going to get eaten up very quickly. And if you're on the wrong side of the trend and you don't have adequate stops in that, you're going to get beat up big time. And I felt the pain on not having stop losses at the right places and just getting beat up because you think, okay, put a safety stop here, and if it gets there and it hits the safety stop. So I have to go back to the technicals, and of course, when I do go back to the technicals, it will be looking at, hey, do I have something short term to trade? And so what I would do is I'd look at the larger time frames, see if there's something holding, like at right now, Aussie JPY. Although the market had turned, we see that there's an inverted fair value gap here, which creates an opportunity as price retests it. But the problem here is, because we're still in an uptrend, I want this to be confirmed. So which means I need more conviction in order to sell it off that level. And if it doesn't hold and it disrespects that level, then it's buying all day long. So and that's the thing with a very aggressive market like the yens, is that you need more conviction in order to be able to get in on that ride. So I'm going to move away from Aussie. Let me see if I can get a JPY here. Euro JPY. Let me jump. Pound JPY. Let me take a look. I think I was looking at. So yeah, you can see here, pound goes to a weekly fair value gap here and respects that level. And now we're getting a little bit of a U-turn off that. So if I go down to the lower time frame, all I got to do is take a look at an inverted fair value gap, which it's sitting over here. And if price trades above that, I'm long on the pound JPY. So what I would do here, Nick, I'd go ahead and buy long here. All right. Oh, sorry, I forgot to change I'd buy long about above that area. So let me just change my symbol here. So I'll buy long above that fair value gap. Let me put it back in here. It is there and there. And I'd go buy here, enter a long just above that. So it's going to be a buy, a stop right here, buying above that area. And then what I'll do is I'll place my stop loss just below the fair value gap. So we have that break. I want to place just below it. And then I'll target the highs. I'm not going to go chase after years and years of movement. I'm just going to take that high right there and be the hot target. So if you look at my risk reward ratio, it's about 1 to 2.7, and that would be adequate. But I'd only start buying above that level. And if I'm above that level, I'm good to go.
There you go. Well, yes, I think it's an interesting concept, that concept of a breakout to the upside above the fair value gap. That's a really interesting theory there, or approach to that. So basically looking for the breakout to continue to the upside with a defined risk reward, looking for a move back to those highs. Looks great. Yeah, I mean, basically the Japanese yen is one of the reasons that it's so messy for a lot of traders, I would say, is that it just moves a lot more than a lot of the other currencies. The volatility by itself makes it more to try and keep in the box, right? It's real easy for it to cat out of the bag kind of thing, because when the yen moves, it can move very, very big. You're talking about, pull up pound yen or Aussie yen, Kiwi yen, and you can look at the moves over the course of a month, and it is much larger than if you're trading euro dollar, or you're trading, Aussie Swiss or Aussie CAD, some of the pairs that move a lot less. So that volatility sometimes can catch traders by surprise. So please be careful with that. And here's something you got to be careful with. You got to be quick with. We got a 25K instant funded account about to be dropped. This is super, super awesome that they're doing this. 25K instant account. We're going to drop the information in the chat here. This is, as I've mentioned before, first come, first serve. Do me a favor, hit the thumbs up button, subscribe to the channel if you're new. These giveaways are absolutely so awesome and very generous of DNA Funded to give away 5 different challenges. There it is, the 25K instant challenge. Use that promo code there, punch it in, first come, first serve, and you get a free 25K instant challenge. One person, that is, the lucky winner gets that. Okay, with that said, this is probably my favorite part of every trading battle. It is challenge number 5. We'll play a quick clip and we'll jump into it, starting off with Gary. Check this out. So as you saw there, the ambush round is a lot of fun. It's basically where we each choose, or each of you choose, one asset for the competitor that you are going up against to place a trade on. So Gary, we'll have you choose first for Chris what you would like him to place a trade on, and then we'll let Chris jump into the chart. So what symbol are you thinking about?
I'm going to go with crude oil, and I want him. Do I get the direction as well, or does he decide on the direction?
Nope, he gets to choose the direction, how much size.
Son of a mother. Okay. All right. Then, all right, I'm going to give him crude oil.
Okay. And I just got to say, everyone chooses crude oil. And it's almost like, I mean, nothing against you. I think it's the right one, because oil is so difficult sometimes to trade. It's such a volatile, geopolitical stuff can impact it. Economic data can impact it. It's a wild one to watch. Chris, what are you doing with oil here? So that's your pick. You can choose long, short, however you want to play it, but got to trade oil.
All right. Well, thank you for that, Gary. Given that I don't normally trade oil, I appreciate you picking oil. I guess we'll test what I said before about my analysis applying to anything, right?
There you go.
Okay, so having a look at oil, starting off on the daily time frame here, the first thing that jumps out at me is that we are at sort of a pivotal point here. in the market right now at, where we are, with the true level being roundabout the 60-61 mark over here. We are relatively low down in the move. I mean, the way I would sort of look at this right off the bat is I'm looking at this overall long-term, and I mean very long-term wave structure here. So, overall, this guy here, this high here is the price to beat. And this actually looks like a pretty good level for me to get in around about here. Again, we always run the risk of the market pulling back to grab liquidity before going long again. And that would be located right down in here. So for me, I would go long. I would put a stop far and away from these lows. That's the only way I would do it. So I'm long. I'm going to put a stop down there below those lows, but I'm long.
Okay. It's going long on US oil. I think about sometimes, probably too often, like late at night when no one's around, as I think about with oil, why did I not buy so much oil in March of 2020 when it was trading at like 1 cent on the futures market? Why didn't I do that? In all seriousness, though, oil prices during 2020 got absolutely destroyed, and they went down so much, and it was like baffling. A lot of people, myself included, didn't even know that could happen to crude oil prices, but they literally went just around to zero on the futures market. It was insane. Anyways, Chris, you got to return fire here for our friend FX Big Dog. What's he trading? You can choose anything. You could even throw oil right back at him. That seems like everyone's strategy these days. It's just, all right, you trade oil. No, you trade oil. So whatever. What would you like to pick for Chris or for Gary?
Tempting as that sounds to throw oil back at him, I want to give him. I feel like he's prepared for that sort of thing. So I want to give him a bit more of a curveball than that and a more difficult pair. So personally, I've always had a personal hatred for the Swiss yen. So I'd like to throw Swiss yen at Gary.
Very cool. Thank you. The currency from hell once again appears.
The currency is plural from now. You get the two risk-off currencies going up against one another.
Yeah, and we know that both those have got sort of like currency manipulation, and so it has been a battle. Which one is stronger? Which one weaker? And so that's a tough one. All right. So again, the most important thing before you even make any decision on what you're going to do, you find out. I'm going to look at this thing and say, what is the market trend? So the weekly gives me zero idea what it's going to do in the short term because it's trying to manipulate above the high here, but it's still sitting above there, not getting a lot of information from there. The daily's confused. It's range bound on the daily. Go to the 4-hour time frame. Boom. Now I get some information here on the 4-hour. Because why? Because when price starts working its way up from a high-low setup like it does here, it's got to validate. And if you see here, this swing right here pulls back to a 382 bounce, takes out the high. So we had a break of structure. And with the break of structure, this becomes now a new swing low, swing high. Price already swept through that. So we've got displacement through that. We actually got a bearish crown pattern here, but we also got what we call change of character, which means we're now looking at the possibilities of the Swiss slowing down, or at least going down below the lows here and chasing off the lows here, because we're looking for liquidity. I'm not saying it's overall bearish. I'm just saying it's going to be pushing down to what we call inducement levels. And so it's looking for sell side delivery before it turns around and heads back up north. So I'm going to do this. I'm going to look at, I've got an order block sitting over here. I prefer to see a fair value gap. So let me see if I can grab that. Is there a fair value gap there? Nope. I thought there was. Do we have an inversion? Not quite. Okay, so here we go. I'd like to see an inversion. Price does not trade through that, or does a little bit. I'd like to see a displacement move through that. So what I'm going to do is below this level here, I will sell below the fair value gap, or at least the inversion. So I'll put an order to sell below that area. I would put my stop loss above the gap where I'm expecting it to hold at. And then I will go ahead and look to trade it back down to this low right here, because once we break this low, it's chasing after the next sell side. This is going to be my sell side delivery right here. So I'm going to go ahead and mark it off as my sell side draw, and I'm going to target that level there. My risk reward ratio is about 1 to 2.5 on that. I got to increase my lot size. I'll go ahead and increase the lot sizes here to let's go with 1 contract on that, and I'll confirm it.
Okay.
Yep, that's it.
Got the sell stop set up, and a couple yen pairs waiting here for us. Real quick, maybe what we could do here is we'll run through, because that's our last challenge, but we've still got to wrap up here in terms of looking at overall positions. Gary, you've got the screen here. In terms of positions you've got open now or pending, give us just a little of a walkthrough of before we say goodbye, what you've got set up here for the remainder of this week.
Okay, so I did go ahead and take partial profit. In fact, I took all my profit on the gold trade. I'm looking for a correction move on that, and I'll jump back in. So I managed to close out about 11,500 on that. And the Ethereum trade right now, I put in an order there, but I'm looking for it to come back to a fair value gap. So I'm looking for that to go ahead and pull back a little bit. And if we do, there will be another buy on that. So I'm looking for it to come back to retest this area. And then there will be another buy order sitting over here. I can actually go ahead and position myself right now so everyone can see. Oops, sorry, change signs. There it is. So there'll be another buy limit around about that area. And then, I'll have to drop that because of equity. And then what I've got as well here is I've got the pending order sitting on, I believe it was on the pound the Euro JPY. So go back to Euro JPY here. And here is my, was it Euro JPY? Or was it
GBP JPY? I think it was.
Yeah.
Pound JPY?
Yeah.
You might be right. Yeah, pound JPY. Let's take a look. Yeah, pound JPY. So I got the pound JPY sitting here to buy above that fair value gap here. And because of accumulation, I don't want to buy in on this fair value gap here because the market's going to probably go back to the bottom of the range. So either it's going to break north or it's going to come back and retest here, but I'd rather wait for the breakout because once again, traders, as I mentioned before, accumulation, manipulation to buy side liquidity, and then we'll move into distribution again. So I'm looking for that to be the manipulation move. And then the last one here that we spoke about was on the Swiss, and the Swiss right here, Swiss JPY. Oh, we all got the sort of the rundown on that. I'm looking for this fair value gap here to, is it the fair value gap? Sorry, I'm on the wrong chart here. There we go. I'm looking to sell below this inverted fair value gap here. There's the sell. Here's the order right here to put the stop loss. And I'm looking for this sell side delivery right here.
Okay, there you go. Nice walkthrough. Thanks for that, Gary. And yes, guys, we do have one more giveaway challenge. We're just going to finish up wrapping through everyone's setups, and then we will do the last giveaway. So stay tuned on that. No, I haven't forgotten. I almost did, but I was politely reminded by our producers behind the scenes. Chris, what about you? Let's do just a quick walkthrough in terms of positions currently ready to go.
Yeah, absolutely. So starting off with gold, I'm very much in agreement. Obviously, gold has been, as we've said, a runaway train for a long time. I do think, as I said earlier, I think it's hugely overextended, though, and in desperate need of a pullback. So I'm banking on that pullback in the first leg of the trade, and then looking to go ahead and buy it once we get down to roundabout 5,200. I'll also consider a buy at 5,300. It really just depends on, what price action does once we get down to 5,300. I'll sort of make a call then. To mitigate the just how upside down I am on the first trade, because I sold it at market for purposes of the battle. To mitigate the downside on that, I went ahead and entered again. Selling right over here at 53.80 with a stop just at 5,400. So I'm fingers crossed that gold doesn't have 5,400 in it today. But yeah, obviously
we'll have to see.
Yeah.
Do you have any other ones that are open, or are the rest just pending?
No, so I do have, and just to reiterate again, I have the pending order on gold there to go long. I'm also live on a trade on Euro US dollar. I've sold that one. I've got my stop at 1.2, and I'm looking to take profit down here squarely inside this demand zone at 118.40. So again, really counting on resistance to hold here and do its job and push me back down again. And then for Bitcoin, I am long on this as well, currently upside down a little bit, but long looking at the overall channel, bigger picture channel here. And I am anticipating that it will resume. And I may want to give myself a little bit more room with the stop loss there to cover these lows as well. But for now, I don't have that. I have it set here. What I might do instead is just sort of put a pending buy down here around about 87.5 and look to kind of take it long there if this long fails.
Okay.
And so that's the game plan with Bitcoin. For Aussie yen, I'm long on that one. And so far, so good. Again, I've got my stop loss, down below the cluster of lows over there. And then I've got a big target on Aussie yen. I'm looking at the Fibonacci extension. It's a 2.618 extension at 117.57. So I'm looking to ideally take this all the way up to 117.57. Whether we get there by the end of next week, again, we'll see. But that is the game plan. Yep. And then, as Gary so kindly gave me oil, I took oil long at market, although having dropped down to the smaller time frame, I'm kind of regretting that a little bit. I kind of wanted, a similar thing where it looks to me like we're 100% going to come back and grab bullish liquidity over here in this demand zone right here. So what I might do here again is just add another entry sort of down here to go long again and try to recoup some of the losses, provided it does do that from where we are currently.
Okay, fair enough. Yeah, and we'll see about that oil trade because geopolitically, I think something's got to be going on right now with oil and silver and oil, or gold, silver, and oil all making the moves that they're moving. So who knows? Maybe it'll get bailed out to the upside on some sort of crazy situation. With that said, I promised we'd do one last final giveaway here for live stream participants here. For those of you who have been patiently waiting, we're going to be doing a final 25K instant funded account. Thanks to our gracious sponsors here today, DNA Funded. We're going to drop the code here. It is first come, first serve. I know there's a lot of people who are about to sweaty their way over to the DNA Fund. They're about to punch in that promo code as fast as they can. It is first come, first serve. Whoever gets it, gets it. And that should be snapped up pretty quick. So there you go. Again, if you guys are not already trading with DNA Funded, would like to check them out, they offer a wide range of stuff. And one of the cool things about DNA Funded, just what I know about them, is they offer a ton of different products in one prop firm. So you can trade all sorts of different CFD products if that's something that you're interested in. So check them out. Thanks to them for sponsoring today's trading battle. And if you guys enjoyed it in the audience, do us a big favor here, help us out, subscribe to the channel here. For future events, we'll be doing, of course, more giveaways, but hopefully you're here honestly for the content itself, because traders like Gary and Chris bring a wealth of knowledge to the trading community. They offer all sorts of great content themselves that I highly recommend you take a moment to subscribe to their content, find them on socials. Gary, what's the easiest way for people to connect with you to find out more and to potentially learn from you in the future?
Yep, the best way is to go to our website, tradersnetworkclub.com. You can also Google and search me, FX Big Dog. You'll find me on FX Big Dog. And, as we know that the Forex market tends to be a little slow sometimes and people get a little impatient, we teach traders how to be patient with the Forex market, but then also get some instant gratification by trading futures market in the early morning, doing some scalping. So if you join us in the Traders Network Club, you can get involved in futures trading, funded accounts with DNA, as well as, of course, how to be able to get that instant gratification by scalping the futures market. And we'll teach you in 15 minutes how to be able to do that. No problem.
Yep, there you go. Well, and then we'll also do the same for Chris in terms of ways to find you in the future. Chris, what's the best way for people to find you and connect with you?
Yeah, great. Thanks. Just head on over to www.kickstarttrading.com. You'll find me there.
Perfect. Awesome. Well, thank you guys for participating in this really fun and insightful trading battle. And I would have never guessed. Well, actually, I don't know. Recently, gold's been moving so crazy, but gold at this point is up 4% on the day. Like, what the heck is that? It's like almost every day that gold is making a 2+% move. So we are living in some crazy times, and having the right people to learn from. Of course, the trading battle, it's for fun, it's for educational purposes. At the end of the day, trading is a long-term game. What happens in the next few days, you know, these guys might have made some great calls, or maybe not so much. Sometimes, you know, I've been on trading battles where I take a trade and it's like the worst trade in the world. I've also had excellent trading battles. The bigger picture is that you hopefully got something out of these guys' commentary and what they did to interpret the markets. And regardless of the outcome of a couple trades, did you get something in regards to learning how they're thinking about markets prior to making a decision to go long, short particular assets? So Chris, Gary, thank you guys very much for coming on the trading battle. And to everybody in the audience, thank you for joining us here. Like I said earlier, subscribe, hit the like button, all that good stuff. And we will see you all on the next one. Thanks for tuning in.
Thanks, guys.
Thank you very much.